Hi, it's Stan Reinford, and welcome to this week's market update for June 24th. Hard to believe we're halfway through the year. So, again, here's a great time to reassess where you're at this year, both personally and business wise. So, as I've been doing too. So, let's jump into it. So, lots of great questions, lots of great suggestions, and want to just jump into this here. So, we have a lot of things that are going on over the last week. So, let's kind of jump into it. So, let's talk about the candlesticks. Candlesticks down below, we're looking at the 10-year chart. So, the higher we are in this chart, rates are higher. The lower we are, rates are lower. In fact, you'll see that the 10-year here, we're actually down right around 4.4. This is the lowest we've been in several months. So that is a good thing here. So we always want this candlestick to be red all the way to the right. That's a good sign. So let's kind of jump into it here. On the left-hand side, we have the 30-year Treasury. To the center, we have the 10-year, and then to the right, we have the S&P 500. So let's kind of jump into what's been happening. At the end of last week, the president of the United States and the president of Iran signed the memorandum of understanding. Immediately, the Strait of Hormuz opened. Barrels of oil are flowing. In fact, it's predicted that there's somewhere in the 30 million barrels that have gone through there. Sanctions have all been removed, and there's an uptick in the traffic in the Strait of Hormuz. Not quite where it was before the war, but darn close. The problem is right now that the markets are not 100% sure that this is going to continue. They're waiting for that hiccup again, just as we've had along the way. So once the markets are more comfortable with what's happening, you'll see a lot of things happening. In fact, today oil hit right around $70 a barrel on WTI. It's coming down at the pump slowly. And what you'll see is once the markets believe that this is 100% coming, you'll start seeing rates come down. But I don't know that that's going to happen too quick. It's going to happen just a little bit at a time. So we'll have to wait and see. Over the weekend, the maestro passed away. Alan Greenspan was 100 years old, by the way, passed away. He was a previous Fed chair. In fact, he was the second longest Fed chair ever. In fact, back in 1996, he had a similar circumstance as Kevin Warsh does right now. Kevin Warsh is dealing with AI and what to do with that. Alan Greenspan was dealing with the tech boom, and Janet Yellen was trying to get him to increase interest rates. He had the forethought to sit back and wait because everybody thought that inflation was going to kick up and everything else. It's very similar to what Kevin Warsh is dealing with right now. So we'll have to wait and see what happens there. In Fed news, obviously Kevin Warsh he had his first Fed meeting last week, and out of that, he came that he wants to create 5 task forces to see what's happening out there and to basically deal with all the different types of things that he has to deal with here. One of those things being inflation, whether or not he's going to use true means and all these other things that are happening out there. But one of the things that he did say over the weekend is that Alan Greenspan taught him a lot of things, especially how to be a good Fed chair. So we will have to wait and see what happens there. But one of the things that I saw today is Mark Twain had famously said that history doesn't always repeat itself, but it often rhymes. So we'll have to wait and see. So in regards to what's happening next, ADP released their weekly employment report for the week ending June 6th, showing that an average of 30,750 jobs were created for the previous 4 weeks, which basically means that there was a forecast of about 130,000 jobs for the full month. This is slightly up from last month. So we'll have to wait and see what happens. A lot of people believe that this is just a trend that's going to be going back and forth here, and there could be some revisions coming forward that could revise these lower. There's a lot of uncertainty there. So let's talk housing. One of the things that came out is a report that said that it during that basically it's a 4-year low where down payments are at a 4-year low, meaning FHA and VA now are actually dominant in the purchase market, which is pretty interesting. So I love helping clients with FHA, especially VA loans. So let's talk interest rates. So interest rates are in the mid sixes right now. We'll have to wait and see what happens with them coming down. Again, I believe it's going to be slow. So do the markets, so do the analysts, because everybody's waiting to see what happens and make sure that this is 100% going to happen. And everybody is committed to this whole thing, especially Iran, that there's no hiccups and everything. Remember, there's about 15 things that go into pricing alone. So some interest rates might be a little bit higher that you're quoted. Depends if you're buying rates, how many rate or how many points you're buying, and things like that. So there's a lot to it, along with down payments. But again, if you have a circumstance that you would like to run by us, please give us a call. We'd love to help. Remember, we help clients that are buying or refinancing, whether it's a primary residence, second home, or investment property. And whether or not you're refinancing, remember, we've been helping a lot of clients. There's a lot of debt out there, and equity is at an all-time high out there. We're helping clients save a whole lot of money, even though they're trading lower interest rates for higher interest rates, helping them save a lot of money and changing some lives out there. So remember, we do reverse mortgages, also home equities. We do it all. So whatever we can help you with, let us know. Have a great week, and please forward and share.